All right, hello everybody. Testing 1 2 3. Testing 1 2 3. Hope everybody is doing okay. Type a 3 in the chat if you can hear me. This is a quick audio visual check. Type a 3 in the chat if you can hear me and see my screen, please. Hey, Modi, Rosh, Dave, Silver in the third. Appreciate it. Peggy, Joe, Dan. All right, guys. All right, give me a minute or two. Go ahead and get cozy, get relaxed, get yourself something to drink. We're going to get started here in just a couple moments. I'm going to switch over to another monitor. So I'm going to stop the screen sharing for just a bit, and we'll be back here in about 45 to 50 seconds. All right, guys, I am back. Welcome to the presentation. You are here to see 3-point price action formula to spot market reversals, any market in any time frame. So now that I am back, if you don't mind, if I can get just a handful of you to let me know you can hear me and see my screen, I'd stop the presentation momentarily while I've made some adjustments. If you don't mind, just let me know that I'm not speaking into a black hole here. All right, awesome. All right, thanks, gang. So let's go ahead and get started here. We are a couple minutes past the hour. So first off, I want to say thank you for joining me today. Don't know where you are in the world, but good morning, good afternoon, or good evening, wherever you are. Do appreciate you taking time out of your day to come see this presentation. My name is Silas Peters. I'm the founder and head trader of Seasonal Swing Trader, and hopefully you can see my screen here. So we're going to go ahead and get started. Before we get started, we must always begin by our risk disclaimer. This is required by the regulatory governing bodies and our attorneys. Past performance is not necessarily indicative of future results. There is substantial risk of loss associated with trading. Only risk capital should be used to trade. You can lose money in trading. So bottom line is, in short, what this means, don't trade with your rent money, your mortgage money, your milk money, your child's educational funds. You can lose money in trading. So let's go ahead and get to know one another. I like to see who I'm talking to in the world. I am in LA, not Southern Cal, but LA as in lower Alabama on the Gulf of Mexico on the Gulf Coast. So where is everybody tuning into from the world today? I'd like to see where everybody's from, and type a 1 in the chat if this is your first time seeing this presentation. Super excited to be giving this presentation. So we've got Quebec, welcome Daniel, Orlando, Houston, Idaho, Reno, Michigan, Connecticut, Campbelltown, Australia. It's got to be a first for me as well. Welcome. Australia, Raleigh, Charlotte, 2 back-to-back in Sears, another Australian, Chicago, Miami, Brazil. Don't get too many Brazilians, but welcome. Awesome. That's really cool, everybody. I do want to be respectful of your time. We're going to be together for about 60 minutes or so, and I do want to respect everybody's time. I know it may be early, late for some, so let's go ahead and get started. Literally people from all over the world. So let's go ahead and kick this off. I'm going to introduce myself once again. My name is Silas Peters. This is me standing in front of my alma mater at the University of Alabama with my two beautiful daughters. Other pictures of my family, just to show you that I'm a real human being here. See my girls down there in the bottom left-hand corner made a couple of Corona conundrum masks. They didn't make me any, but as long as they're safe, I guess that's okay. And just some other pictures of us hanging out at the bay, trying to get some fresh air. So I hope everybody is safe out there in the world, both physically as well as in the marketplace. So 3 days after I graduated, I sold my car, I packed up my small belongings, and I moved to the great city of Chicago. I drove straight north, headed to the great city of Chicago, and it's here where I cut my teeth in the commodity markets working at the Chicago Board of Trade. And I was really bitten by the trading bug and never looked back. So while there, I helped run a global trading desk, placing and managing books of trades across the Americas, Asia, and European sessions, primarily working with large block order flow for hedge funds, banks, CTAs, and the like. Also been a part of building and managing several futures and equity brokerage firms, managing operations, trading back office sales and support. Also worked as a private family office investment consultant. I hold or have held these various futures and securities licenses. And then in 2016, I launched Seasonal Swing Trader. I'm also a COO of a registered investment advisor as well. But my journey as a trader wasn't always easy. There was a learning curve, several obstacles and hurdles on the path to where I am today. The first step was obviously learning. School does not teach real life experience in the markets. In the beginning, I made money. In fact, I made a substantial amount of money. Was I lucky? I like to not think that I was, but ignorance and greed cost me my profits. In fact, I blew up an account, then I blew up several others in what I like to call revenge trading. I'm sure some of you can attest to that. I finally went back to my roots. I settled down, worked my process, and found overall consistency. But enough about me. Let's talk about you. Does your trading desk look like this? Does anybody's trading desk look like this? I hope that it doesn't. Let me know if it does. If it does, that's cool. Now, my desk did look like this in Chicago for obvious reasons, but I've since pared back to just a handful of monitors for quotes, charts, order entry, and the internet for day-to-day operations. But this is certainly not necessary. I see a lot of people say, no, hell no, have 12 monitors. And that's great. I mean, it's whatever your flavor or style of trading may be. But all this does, in my opinion, and it leads us to this slide here, is paralysis analysis. Per Wikipedia, paralysis analysis is the state of overanalyzing or overthinking situations so a decision or action is never taken, in effect paralyzing the outcome. So who here has been a victim or is a victim of paralysis analysis? I'm raising my hand. I've been there, done that, got the t-shirt, and let me tell you, it's no fun. So hopefully with this presentation, we're going to keep things simple and we're going to eliminate the paralysis analysis victims. So let's see, a lot of you are, a lot of you ready to kick that nasty habit. I appreciate the interaction thus far. What do you trade? I'd like to see who I'm talking to. You trade stocks, ETFs, options, futures, Forex, maybe even cryptocurrency. What products or asset classes do you trade? I trade these all on an active basis with the exception of cryptocurrency. So I trade stocks, options, futures, and Forex. Do not trade cryptocurrency. I do have, these are air quotes, investments in or accounts in cryptocurrency across the internet. Don't even know how to get into half the damn things, but I view it more as a lottery ticket. But other than that, I do trade all these on an active basis. So let's see here. We've got mostly stocks and options traders, which is usually the case. That's not a surprise there. All of the above, good for you. NASDAQ and Forex, interesting. Buzz, the lone cryptocurrency trader, all assets, Forex, futures and Forex, ETFs, position, weekly options, cool. So really kind of all over the board, and that's really what I like to see, because what I'm going to share with you today works in all those markets. It's highly accurate, it's profitable, works in all time frames, it's 99% mechanical. In fact, I'm going to prove it to you. So I do encourage you to stick around to the end. I encourage you, all of your questions and comments throughout the presentation. Ask away. I'm not ignoring you on purpose, but I do want to make sure we get to the meat of the presentation. And I'm going to go through and answer all of your questions. In fact, we're going to look at some live markets, what happened today, and we're also going to be looking or taking your symbols rather. So, but most importantly, what I'm going to show you is simple. So my agenda promise to you is we're going to learn simple mechanical setup that is repeatable regardless of the market or time frame. So at some time during the presentation here, I'm going to ask you, have I fulfilled my promise? And I hope you'll see a lot of yeses, but I want you to be honest. Speaking of promises, if you're here today, you may have seen or read something about the $10,000 trade promise. Now, full disclaimer, I'm not going to promise you anything in trading or in life, but these were trades that we talked about in multiple free presentations, such as this one, about potential trades looming for $10,000 trade objectives. And you know what? They actually triggered and they went on and met their $10,000 trade objective, just using the very simple mechanical strategy I'm about to share with you. We also talked about these sleeper markets here in coffee and OJ. You can see here from a 5, 15, and 30-year historical price perspective, the markets tended to bottom out at that time of the year. Does that mean that we went and got long these markets, but bought call options, sold put spreads? No, we said wait for this market or this setup to trigger, and that's exactly what they did. They went on to $6,000, $7,000, $8,000 per contract price objective. We also talked about sleeper markets in corn, soybeans, and wheat. This being corn, this being beans. So you're from a 5, 15, 30-year historical price perspective, the markets tended to bottom out or get quiet at this time of the year. That's exactly what they were doing. You had favorable weather out in the Midwest. The markets were almost being lulled to sleep by the market participants. We knew not to be short these markets, but to be very patient, sit on our hands, and wait for this particular setup to happen. And you know what? They did. They went on and triggered and met their $5,000, $6,000, $7,000 per contract price objective. These happen over and over again. And this presentation is not only about futures or commodities. These are talking about potential trade setups that we shared in free presentations such as this one. So who here is ready to see the setup responsible for these very recent trades? We're talking 800 S&P points there on the left on 2 trades. We're talking 160 points on cocoa. We're talking 300 pips on the Aussie Kiwi and $40 or 2 $20 trades there in Facebook. So absolutely, of course you are. Otherwise, you probably wouldn't be here wasting your time. So let's dig right into it and get into what this setup is. It is, drum roll please, the 1, 2, 3 pattern, also referred to as the 1, 2, 3 top or 1, 2, 3 bottom. So who here is familiar with the 1, 2, 3 top? Raise your virtual hand if you are. I'm raising my hand. Look, I didn't invent it. It's one of the most fundamental technical patterns in the textbooks, but I mean, highly, highly overlooked by most traders. This is technical analysis 101, but I'm going to show you how powerful it actually can be. So pretty much everybody, the yeses are piling in. Do have a couple of no's, and that's great for both sides because I think I'm really going to open up your eyes. So let's talk about the principles of the setup. It is price action based. The pattern is comprised of a low and a higher high and a higher low and a break of that higher high in the case that we're going long, or inverse of short. Anticipates a change in trend from up to down on a break below the 2 or B point. Anticipates a change in trend from down to up on a break above the 2 or B point. Generally speaking, the more bars it takes, the bigger the move. Let's talk about the strategy. It usually occurs at the end of trends and swings, can be an indication of a change in trend, can also be found within a trading range. So one may argue that, hey, this is a counter trend strategy or reversal type strategy. And in essence, it is, but we're going to talk about ways and filters that you can apply to even put the odds further in your favor. I will stress it works extremely well when the pattern sets up at significant areas of support and resistance. Other high probability patterns such as head and shoulders tops and bottoms, double tops, double bottoms, and so forth. So let's take a look at the mechanics. This could be Pepsi stock, this could be Caterpillar, this could be, I don't know, Litecoin, or maybe the Euro currency. Doesn't really matter. We're going to look at the basic principles and mechanics. So here with the 1, 2, 3 top, it's the highest peak. We find this resistance and then we begin to move down. So once we move down and then retrace back up, finding the support, we get an established number 2. So we have a 1 and a 2. Now the market retraces back up here and then pulls back down, giving us our number 3. So we have a 1, 2, 3. Now for a 1, 2, 3 top, this price action could come up here or even up here as long as we don't take out the number 1 high. And we have a 1, 2, 3. So as 1, 2, 3 top traders, we know we're looking to get short on breaks or closes below the number 2. 1, 2, 3 bottom, as you would suspect, same rules apply, but only in inverse. So here we have a number 1 point as the market has come down, finding its lowest low, finding support, and pulls up. Once we quit making these lower highs and pull back, we get an established number 2. We have a 1, 2. Market keeps making lows. Once we stop making these higher lows and pull back up, we get our 1, 2, 3. Again, the market could have come here or even here as long as we don't take out the number 1 low. We have a valid 1, 2, 3. Now, on a 1, 2, 3 bottom trade, we know we're looking to get long on breaks or closes above the number 2. We don't know what happens in this example, but that's where we would be looking to get long. Let's take a look at some real life chart examples. We're going to start here with the Aussie dollar, the 6A futures. If you don't trade futures, you could look at FXA, the ETF. If you don't trade futures or Forex, you could look at, or excuse me, futures or ETFs. You could look at the Aussie US cross pair in the Forex market. So this is a daily chart of the Australian dollar. Now on a daily chart, we primarily like to look at 52-week highs or 52-week lows. That's not an absolute rule, nothing set in stone. Those are going to give you your higher probability setups. We'll talk about ways later where you can dial it in tighter, say every 6 months, 90 days, and so forth to find more setups. But for this example, we're going to use 52-week highs or 52-week lows. So here we have a red number 1 circle. Hopefully everybody can see that. Why is that there? Because that's indicating or telling us that we have a 52-week high. So the market pulls down, retraces back higher, giving us established number 2. 1, 2. Now we only go back or retrace higher by about 4 or 5 bars here before we come back down, giving us our 1, 2, 3. Again, we could have come up here, or even up here, as long as we don't take out that number 1 high. We have a valid 1, 2, 3 top. 1, 2, 3. We know for a 1, 2, 3 top that we're looking to get short on breaks or closes below the number 2, which is exactly what we get right here. So you say that's great. I already know the setup. What next? What about the other important parts of the recipe? Well, where am I placing my stop, my risk? Where am I putting my profit targets? Very good questions, very important questions. Our initial risk is always above the high of the number 1. Our initial target is the distance between the high of the 1 measured to the low of the 2 and then measured down. So we measure from here to here and then down, and you can see that's 225 ticks or $2,200 per contract. So yes, it is a 1-to-1 risk reward ratio off the bat. But we're going to talk about ways later how you can mitigate that risk substantially by allowing the trade to work in your favor. So once we start breaking down here, we can then quickly move our areas to where? The next logical area of resistance, which is above the number 3 high. So we quickly cut our risk by 50, 60, 70% in this example. Let's take a look at the 1, 2, 3 top in Walmart. Same rules apply here. We have a new number 1. Why? Because it's a 52-week high. market trades down, pulls back up, giving us a 1, 2, 3. Now we can sit on our hands for days knowing what most traders are still wondering. Well, where am I going to get in? Where am I going to put my stop? Where am I taking profits? Well, we know that we're looking to get short on breaks or closes below the number 2, which is what we get here. We know our initial risk is above the number 1 high, and we know our initial target is the distance between the 1 and the 2, or $5 in this example. Let's look at the 1, 2, 3 bottom. 1, 2, 3 bottom. This is a 15-minute chart of the E-mini S&P. On an intraday chart, whether it's a tick, 5, 15-minute chart, we're obviously not going to be looking for 52-week highs or 52-week lows. It wouldn't make much sense. So how do I define what a session low or session high is? It's simply going back to the Globex session. So if you're not familiar with futures or Forex, they're trading virtually around the clock. They open up at 5 p.m. Central on Sunday and trading basically around the clock through Friday afternoon close. So the way I define a session high or session low is looking back at the Globex session. So you start your trading day at 3 a.m. or 6 a.m. or 12 p.m. or maybe the last hour of the day, you're going to be looking for new highs or new lows based from that point going forward. All right. So here we have a new session low. This is a session low. This is the lowest low of the Globex session going back to 5 p.m. Central. All right. So market trades up and then down. For a 1, 2, 3 bottom, we know that we're looking to get long on breaks above the number 2. So aggressive traders may consider getting long above the number 2 here, working a buy stop at ticker 2, and they're triggered into the long side. Now, a couple of alternative entry methods, or at least that I prefer, are to either A, wait for the market to come back and retest the number 2 breakout area, or wait for the market to come back and hook back up through the number 2, okay? So one of two things are gonna happen here. One, if you elect to use this method, you're gonna be triggered in the trade, and you may go up to profit target. If you use this entry method here, where you wait for the market to come back down and hook back up, giving that second confirmation, you're going to either A, miss out on a couple of trades, because sometimes the market will bust up here and zip up and hit profit targets, leaving you in the dust. Alternatively, it's going to help keep you out of potentially losing trades. Sometimes the market will come up and come back down and not go back up, thus stopping you out. So by allowing this hook method to come back up and through the 2, it's giving you that extra confirmation of entry. Let's look at a 1, 2, 3 bottom on Apple. Weekly chart of Apple, hell of a way to catch some longer term position type moves here. Here we have a multi-week low, 1, 2, 3. We also have a high probability double bottom. The market breaks out above the number 2 here, or this large bullish candle, trades sideways for a few weeks, comes back down and retests and or hooks back above. That's our confirmation to get long Apple. How? We buy Apple stock, we buy call spreads, we sell out of the money put spreads, whatever your flavor or style of trading may be. Now, here's an example of a failed trade. I hate to bust your bubble. They don't all work. There's no holy grail in trading or in life, but I know you're all big boys and girls. So here we have a failed trade on the E-mini S&P. So 5-minute chart. I probably took this on my live account. We have a new number 1 top. Market trades lower, comes back up. It's a 1, 2, 3. We also have a trend line break. I like the setup. Looks good. If you're getting short on the initial break below the number 2, you're short here, or if you wait for the hook method, you get short on this second test, boom, boom, and you're up by maybe 1 or 2 points. Now, if you sat on your hands and didn't do anything, didn't exercise any type of money management or risk management, you're stopped out above the initial risk, above the high of the 1. Or if you did any type of money management, you likely drug your stop to the next level of resistance at the number 3, cutting your risk in half, and you got stopped out. But look at what we have here. We have a new number 1. This high is greater than that high, so we start to count over. 1, 2, 3, breaks below the number 2, ends up being a nice profitable trade. This is an example of a no trigger trade. It's neither good, bad, nor ugly. It is what it is. It's just avoided trade. So here we have a 1, 2, 3. We know we're looking to get long above the number 2. What happens? The market trades lower, takes out the number 1 low. We start to count over. 1, 2, 3. Looking to get long on breaks above the number 2. Market breaks down, takes out the number 1 low. We start to count over. 1, 2, 3. Market finally triggers us long this last attempt. Now, let me tell you why I like when this happens. What's likely happening? Absolutely, Henry, and I'm going to show you some examples. So what is happening here is likely some type of divergence. So what is divergence here in a nutshell? Well, we're making lower lows on the price action. Lower lows, lower lows, lower lows, but we're likely getting some type of divergence, meaning whether you use an RSI, stochastics, MACD, we're making higher lows, or i.e. no lower lows there, thus creating the divergence. So I'm going to show you some examples of that on some charts here in a few moments. So let's talk about the trade management again. Confirmation of entries on a break above the 2 or B point for a long, or a break below the 2 or B point for a short. Exit strategies, if you're only able to trade one contract, one futures contract, one Forex contract, one share of stock, one option contract, I would say strive to go for the distance between the number 1 and number 2 points. Now, if you have the luxury to trade multiple contracts, whether that's futures, shares of stock, or options, then I would say, hey, take a third off, 2/3, half at that distance between the 1 and 2 point, because it's uncanny how more often than not, it's going to tag that often to a tick and then reverse. As far as additional extra strategies, they really come a dime a dozen, and you as an individual have to figure out what works best for you. But I like to use good old-fashioned structure points, support resistance levels. You could use Fibonacci, moving average stops, Parsar, and more. You've got to find out what works best for you. I've already showed you the setup works on any market, where you trade pips and Forex, Pepsi stock, pot, potash, or pot stocks, pork bellies, or the Polish zloty, as well as on any time frame, where you trade a tick, 5-minute, hourly, 4-hour, daily, and more, and on any trading style. Are you a position trader, swing trader, day trader, scalper? Do me a favor, type in the chat, what is your trading style? I'm gonna take a swig of water here. Sorry, I was talking away and I forgot to press, I had muted. So we've got a lot of swing and day traders here. A lot of swing. And I love this because I'm going to show you that it works literally regardless of your trading style. And the reason I ask what your trading style is, because hopefully by now, maybe you were still in discovery mode, is have you found your bread and butter? You have to find out what your bread and butter is, because nobody should or could ever tell you what your trading style should be. You have to figure out what works best for you, your lifestyle, the time you can commit in front of the screen, what your risk tolerance is, your educational level, capital, things like that. I found for me, the 5-minute on the S&P, NASDAQ, crude, currency futures, occasionally the 30-year bond, the 4-hour to swing trade a handful of commodities as well as FX, and then the daily for all markets, stocks, ETFs, futures, Forex, options. I love swing trading off of the daily charts. That's where I got started in my trading journey. So again, you've got to figure out what works best for you and the time you are able to commit and how much time you want to commit. Maybe you don't want to stay in the screen. Maybe you do want to be in the screen all day long. It's up to you. So you've seen the proof. Let's look at some real trade examples here. Let's start out here with crude oil. When I say real trade examples, not to say that the ones we just looked at were fake examples, but let's talk about real trade examples that we've utilized in some of our services. So here, a daily chart of crude. whether you trade crude futures or not, everybody's familiar with crude. Everybody loves to talk about it, track it, speculate on it, and so forth. What I like to say is I don't care where the price is going. I'm gonna let price action and this setup or strategy tell me where prices are likely headed. So here we have a few trade examples. Let's talk about them and dissect them one by one. This is a 52-week high as indicated by the 1. We have a smaller 1, 2, 3. It is a valid one nonetheless, but it's small. But we know immediately when we see a 1, 2, 3 top, we know where we're getting in, or we know we're getting short. We know our initial risk is above the 1, and we know our initial target is the distance between the 1 and the 2. See that once we broke down and got a couple retests, we quickly met our $3 or $3,000 per contract price objective. Then what happens? We go into sideways mode or consolidation. I get asked, well, does it work in range-bound markets? Well, theoretically, yes, it should, because we're looking for new 1, 2, 3 tops or 1, 2, 3 bottoms. But if you want to trade 1, 2, 3s within a range, by all means, help yourself. You certainly can do that. Here's a nice 1, 2, 3 in the range. We break above, ends up trading higher, and it ends up being a nice profitable trade. But I'm only looking for new highs or new lows, and we get just that. This is a new number 1 point. Why? Because this high is greater than that high, so we have a 1, 2, 3. Now let me tell you why I got excited about this setup. Well, one, because of the high probability nature of the 1, 2, 3 top that we've been discussing. Secondly, we're at a time of the year from a seasonal perspective where the market tends to top out or trade to the downside at this time of the year. So when we have those two things aligned, it's what I like to call the perfect marriage in trading. So we got short here. How? We bought puts. We sold call spreads. We shorted the futures market. And we quickly came down and met our $4 or $4,000 per contract price objective. And then we traded even more to the downside to the tune of $20,000 plus per contract. Now, we didn't catch that entire move, but we damn sure caught a large chunk of it. All we do is we get short and we trail the market using trailing stops until we either A, we get stopped out, or we have a potential reversal. And we almost have one here, potential 1, 2, 3 bottom, potential 1, 2, 3 bottom here. Got super excited about this setup. Why? Because it's a 1, 2, 3 bottom, high probability setup. We have my second favorite chart or technical pattern, which is a beautiful clean triangle. It doesn't get any cleaner than that. And then third, we're at a time of the year from a seasonal perspective where the market tends to go higher. In fact, this is one of the best seasonal trades I have in my pocket, is to get long energy or energy stocks at this time of the year. But you know what happened? Market trades lower, takes out the number 1 low, starting to count over. We sold off another $10 or $10,000 a contract. So by being patient, it kept our emotions in check. And we finally got one last 1, 2, 3 bottom down here, met our $5 or $5,000 per contract price objective, and then some. So I want you to remember this chart and the subsequent charts, because I'm going to show you something really special. Let's talk about gold, another market that everybody loves to talk about. Everybody subscribes all these expensive overseas newsletters talking about gold's going to go here, gold's going to go there. Who cares? Look at the price action, look at the chart, let it tell you where it's likely headed. So here we have a 1, 2, 3 top. Market breaks down below the number 2, gives you a couple of retests, hits our $4 profit objective. Now we flip to the long side. We're just waiting for a new 1, 2, 3 top. 1, 2, 3. Also have a double bottom. Breaks above the number 2. Hits our $2 profit objective. Then we trade sideways. All right. So what about this? Kind of like that crude oil example. We have some 1, 2, 3s in the middle in this range. 1, 2, 3. Trades the upside. 1, 2, 3 top. Trades the downside. But I'm only looking for new highs or new lows, and we get just that. So these lows are lower than these lows, so we're starting new counts. 1, 2, 3, and then you see right here, we gap down, takes out this number one low, 1, 2, 3. Now the market gaps higher 2 days in a row, boom, boom, comes back and retest. I like to use the futures market or the commodity market first. I like to look at those charts because you're not going to see the gaps in most cases because they're trading around the clock, a lot more cleaner or fluid. But if you want to start with the ETFs, that's perfectly fine. So here we get our gap higher, and then we come back and retest. Also get a trend line retest, and we meet our $4 profit objective and then some. All right, here's a few examples on Delta, probably becoming redundant by now. Here we have a 1, 2, 3, breaks above, comes back and retests, hits its $4 profit objective and then some. Here we have a 1, 2, 3 top, gaps down below the number 2. This one never got the retest. I personally don't chase the gap breaks right there. I've got some students and members that will trade all of these, so they're aggressively selling the stock, buying puts and things like that. I like to wait for the retest. So here we get another chance, 1, 2, 3 top. We break, sell off down below the number 2. We get a small retest here, trades at $8 plus lower, and then we get one last long, 1, 2, 3, breaks above, goes sideways, comes back down, ends up going $8 plus. All right, for you Forex traders, this is a 4-hour chart of the CAD Swissy, Canadian dollar versus Swiss franc. In my opinion, it works great on the 4-hour Forex markets here. Here we have a multi-session low, 1, 2, 3, also have a double bottom. Again, if you're one of those aggressive traders getting long on the initial breakout, you're triggered into the trade. Or if you want to wait for the retest and or hook back above, we're filled on a 70 pip profit objective. Now what? All we do is sit and wait for our next 1, 2, 3 top. We don't get married to any particular direction. So here we have a 1, 2, nope, 1, 2, nope, 1, 2, nope, 1, 2. Finally get a 1, 2, 3 top here. It's a smaller one. Trade sideways, hits our 40 pip profit objective. And then I get asked all the time, does it work on a 5-minute chart in the NASDAQ? Or more specifically, does it work on intraday charts? Absolutely, of course it does. Here are a few examples. 1, 2, 3, breaks above, comes back and hooks back above, hits our 13-point profit objective. Here we have a 1, 2, 3, breaks down below, trades sideways for quite a while, giving us a little heartburn, finally flushes down, hit his 20-point profit objective. And then we get one last flush low of the day, probably in the last hour of trading. 1, 2, 3, market breaks above. If you're lucky enough to get long here on the retest, you're filled on your 30-point profit objective in about 2 bars. So why are you here? You're here to learn my mechanical done for you strategy for all markets and all time frames. Have I shown you enough proof? This is the part of the presentation where I'm going to ask you, have I fulfilled my promise? So I'm going to take a swig of water here. Please tell me, have I fulfilled my promise up to this point? And Ross, I'm going to answer that question here shortly. All right, thank you. And you don't have to be nice. If you really don't think that I have, please type no, because I'd love to know how I could break this down any easier for you. But Trader 68 is trying to win my heart. He says roll tide. All right. So have I shown you enough proof? But wait, there's more. You know it was coming. You know there's more. Usually when somebody says, but wait, there's more, it doesn't end well. But in this case, I promise you it will. What if the strategy was automated? What if the strategy was plotted onto your chart for you? What if the trigger entry and the targets were drawn for you? And what if your platform could scan the markets for you and tell you when there was a pending setup? I don't know about you, but I would say that was amazing. So do you remember when I said on that crude chart, remember this chart, because what I'm going to show you is going to be something special. I hope you do. It's just a few moments ago. Here's what I'm talking about. Here is that exact example, that exact chart we just looked at on crude oil. the daily chart of crude, but you may notice it looks a little different. So let's talk about what all these colorful arrows and lines mean. You're smart people, I'm sure you've already figured it out, but let's talk about it. So the green arrow is your number 1 point. Your red arrow is your number 2. Your blue arrow is your number 3. 1, 2, 3. What about the white chevron, or these little sell signals? That's not a sell signal. This is not a buy signal. All this is it's saying that, hey, this is the bar that broke or penetrated the number 2. So this one in a 1, 2, 3 top, it penetrated the number 2 lows. That's why it's pointing lower. Over here, we penetrated the number 2 high. That's why it's pointing higher. So if and only if that happens, we're going to see the chevron print. And if and only if that happens, we're going to see these 4 beautiful lines plot onto your chart. What do the lines mean? Well, your blue line is your breakout or entry level. Your red line is your risk or stop level. Your lime green line is what I call TP1 or profit objective 1. And your dark green line is TP2 or profit objective 2. Pretty simple stuff. Now, what about these green arrows? Why the heck are we seeing all these green arrows? This is because we're making new lows. New lows, new lows, and lows, and lows, and lows, and lows. Once we stop making new lows and pull up, we stop getting new green arrow prints. Here we had that potential reversal, 1, 2, 3. We never break above the number 2. Start making new lows, 1, 2, 3. Looking to get long here. We never break above the number 2. So we start making new lows. Since we never broke above the number 2 high, never broke above the number 2 high, hence no chevron, hence no lines. It's really simple as that. Here's that gold example. Here's a 1, 2, 3, triggers above, it's TP1, TP2. Remember, we don't get anything right here because we're looking for new highs or new lows. Here are these, we're making new lows. We're getting new green arrows because these lows are lower than these lows. Finally get that last low here, 1, 2, 3. Market just nips its head above the number 2 high, TP1, TP2, and then you can see we're starting to get a 1, 2, 3 top over there on the right. Here's a delta example. There's the long, there's the short, there's the short, there's a long. You see the profit levels already listed here for you. And there's the 5-minute NASDAQ chart. Get a breakdown below, hugs the breakout level, is TP1, TP2, hits TP2 to the tick, and TP2 actually happens to be a session low. That's why you see a green arrow. So here we have a new 1, 2, 3 bottom, breaks above, hooks back above, hits TP1. Doesn't quite hit TP2, but close enough for government work. Shouldn't have lost any money. And we trade sideways. New session low, 1, 2, 3. You see market just peaks it above the number 2 high here. Hooks above, hooks back above, it's TP1. As we're looking for TP2, notice that we're also making new session highs as indicated by the green arrow. So here we're waiting for waiting for TP2. We actually get it, looks like right here. But this is an indication that we may be ready to reverse the trade. And we finally get it here, 1, 2, 3. Market breaks down below, comes up, hooks back down, hits TP1, TP2. You see we're hunting for a new low down there. So is this training for you? Only you and you only can answer that. If you're new to the markets and want to jumpstart your success, if you're an experienced trader and want to add another arrow to your trading quiver, if you're tired of all the noise that we talked about, the paralysis analysis, if you want to just simplify your process or add another strategy to what you're currently doing, or if you need a very specific step-by-step mechanical plan, this could be something for you. So I like to tell a quick short story here. When I had this built out and developed, I brought my wife down to my office who teaches ballet part-time. Also brought down my 2 girls who were like 4 and 5 at the time. Trust me, they don't know a flying flip about the markets. I showed them what I was attempting to do here, showed them the charts, showed them the indicator, and said, look, obviously after they got done with their excitement over the colors and the candles and this and that, they got it. They understood what I was trying to do. Very simple mechanical process. So my point is, is that if they can understand it, then you certainly can too. I mean, we don't remember learning how to count to 3 or learning our primary colors, or at least I don't, but that's about all you need to know with a dash of common sense. So I do have Matthew says the audio is gone. Test 1 2 3. Test 1 2 3. Want to make sure everybody can hear me. Test test test. All right. Everybody else can hear me. Let me tell Jay to hit let me see, Matthew to hit F5 or refresh. It sounds like we were good. There we go. All right, so I do have a very special offer for today's workshop attendees. I do limit this to 25 people because, like I said earlier in the presentation, I am a human being and I do monitor my own inbox. I do actually love to communicate with students and clients. I value your feedback and opinion and share ideas. So my time is only so much available. So what is the special offer? It's called the 3S Code High-Low Indicator and Scanner. We've had this built for Thinkorswim, TradeStation, NinjaTrader 8, TradingView, and MT4. Also going to include chart pattern principle, PDF manual, and trading guide, chart pattern cheat sheet, 25 top option strategy guide, VIP email support, and access to our private Discord channel. What the heck is the private Discord channel? I'll talk about that momentarily. But what is the 3S Code High-Low Indicator Scanner, you may ask? Maybe you forgot. Let me refresh your memory. Here's a daily chart of CRE. This is the 3S Code indicator plotted onto your chart. Daily chart of CRE. Here we have a 1, 2, 3 top. Here's your entry. Here's your risk. TP1, TP2, short, short, long. Daily chart of BAC, Bank of America. There's a long, there's a long, there's a long. Here's a daily chart of LOVE, LUV, Southwest. There's a short, hits TP1 to the tick. Here's another short. Whoops, bad trade. That one gets stopped out. Get another chance to get short right here. And then why do all the work when you can let technology do the work for you? So this is my scanner, screenshot of my scanner, Thinkorswim, where I'm looking for 1, 2, 3 tops in the Russell 1000. Only stocks that are optionable, $20 a share or greater. Hit the green scan button and voila, I get my results. Also have a screenshot of some of my watch lists. So I have one monitor dedicated to multiple watch lists across multiple asset classes across multiple time frames. We've been looking at this on Thinkorswim. This is what it looks like on TradeStation. Here's your indicator component. Here's your scanner component. Here's what it looks like on NT8. Here's your indicator component. Here's your scanner component. Here's what it looks like on TradingView. 4-hour chart of Apple. There's a long, there's your indicator component. And then the indicator on MT4, 4-hour chart of Euro Kiwi, long, short, short, and then a long. So there is no scanning component available on TradingView or MT4. It just doesn't exist. But if you are aware of some Russian programmer and want to make an introduction, please do, and we'll have that puppy built out. But right now, get the scanner on Thinkorswim, TradeStation, and NT8, and the indicator on all, including MT4 and TV. Just no scanner on those two platforms. So we know that there's no real crystal ball in the markets, but I like to view this as one that provides me with a process each day. I'm letting the platform and technology scan the markets for me, locate the setup, I go to my platform for entry, and I manage the trade through the exit. And you can start doing so today with the 3S Code. So here's that special offer. So 3S Code High-Low Indicator and Scanner for Thinkorswim, TradeStation, NinjaTrader 8, TradingView, and MT4. Also going to include the chart pattern principle PDF manual trading guide, chart pattern cheat sheet, 25 top option strategy guide, VIP email support, and access to our private Discord channel. Now, we've recently offered this online, no joke, at these prices, $19.97, $14.97, and $9.97. But for the first 25 people today, we're going to offer this as a one-time fee of $397. The offer link is seasonalswingtrader.com/code. I'm going to put this into the chat. We're going to talk about what all the bonuses are and what they mean. And we're going to look at live markets today so you can see exactly how it performs. So there is the link, seasonalswingtrader.com/code. If you have any problems or issues, you can message me. And I've got a ton of questions, and I appreciate that. I'm going to answer all of those. So let's talk about the indicator and scanner. You're going to get a visual plot of the 1, 2, 3 top and bottom reversal areas. The entry, stop, target levels, all color coded for easy reference. Customizable settings, multiple look back periods. So if you don't like lime green, you want puke green, you don't want red, you want hot magenta, multiple look back periods. This is what I was talking about earlier. You can change the settings greater if you want to find less opportunities or more opportunities. You can change the look back settings. If you want to scan for setups only, meaning those that are in the process of setting up, or trigger only, those that have actually triggered, meaning they broke above the 2 or broke below the number 2, or both, you have the ability to do that. You can scan for tops, bottoms, or both at the same time, as well as scan for setups or swing trades at the same time. Bonus 1, chart pattern principle trading manual. This is a 90+ page PDF. You can download it to your desktop, print it out, use it for firewood. I don't really care, but it's going to cover how to read charts, how to identify range markets, trade markets, additional strategies, other high probability chart patterns, seasonal setups, and more. Bonus 2 is my 25 top option strategy guide. Literally strategies for all account sizes, whether you trade basic calls and puts to more intermediate and advanced, such as condors, verticals, butterflies, diagonals, and more. Bonus 3, private Discord channel. So this is something we just created a little over a month ago, I believe. Really excited about it. Basically, it's not a trade room. It's more of like a chat room. It's open 24/7. It's a hub where everybody can come in, full access, trade, or put commentary in, post their charts, post their setups, what's working, what's not, ask the community as well as myself any questions, post comments, and each week I'm posting different scan setups in there across stocks, futures, and Forex on multiple time frames. All right, so here's some unsolicited testimonials. I don't ask for these, they come in all the time. I'm very pleased, but more humbled and happy that people are actually taking action using the 3S code. Here is an example of an alert that went out on one of our services, all trades based on the 3S code. You see $7,800 on crude, $5,800 on unlead, $1,800 on pound, $1,400 on the euro, all using the 3S code pattern. And I do eat what I cook. This is an example, or not example, a snapshot of my Thinkorswim platform where I do my equity options trading, and my futures account here, where you can see I've got crude options, cotton options, copper options, yen options, nat gas options in the S&P. And then finally, just one last nice, easy, clean 2-point trade example here on the E-mini S&P. So here's the offer again, 3S code, indicator and scanner for $397. It's a one-time fee. And let me get to all of your questions. I got a lot of questions, so appreciate your patience. Just hang tight. All right, so Rosh, the exit point, and I'll show this in a real example when we look at some charts from today. The exit point is the distance between the, so for a 1, 2, 3 bottom, it's the distance between the number 1 low and the high of the number 2. For a 1, 2, 3 top, it's the distance between the number 1 high and the low of the number 2 or B point. I'll show you that. It'll make sense, make very sense. So the exit point, you measure that, and you measure that down from the number 2 or up from the number 2, depending on the direction you're trading. So 1-to-1 right off the bat, but more often than not, we're very quickly able to move or adjust that stop once the market moves in our favor. Yes, it is very logical indeed. Appreciate that. All right, Trader 68 is from Talladega. Nice, nice. What is my investment criteria? How to select a stock to trade? Well, one, I have scanners. So like I have technology using the platforms I just showed you. They're scanning the markets. I mean, I would love to manually go through every market every day. And I actually do that for commodities and Forex just because out of habit, I'm following 30, 35 commodity markets in each of those asset classes. And then with stocks, there's just too many. There's thousands of stocks and ETFs and indices. So that's where I'm letting the scanner do the work. So that's kind of part of the criteria. I do add a couple of doses of special sauce to it, and we've got that in the members area. And in fact, let me bring up the members area, if y'all don't mind. So in the once you get logged into the members area here, here's all the Discord information. And then here are all the resources and bonus materials. So we've got PDFs and video guides on how to understand the study, how to customize it, setting up scans and watch lists, day trading with the 3S code, swing trading with the 3S code, so on and so forth. And I show you some different things that I use. And again, we'll look at that on real charts here. Totally up to you, whatever your preference is. So all of your downloads, Thinkorswim right here. Here's the installation video and guide. Here's a little video I did on the seasonality widget. It's not a requirement. I like to trade like to use seasonality alongside the 3S code. After all, I am seasonal swing trader. And then let's see here, TradeStation V10, V95, NinjaTrader 8, TradingView, and then MT4. No, you get access to all of these, all 5 platforms. Again, though, the scanner, there's only a scanner available for TOS, TS, and NT8. There's no scanner capability on TradingView or MT4. I have some very good programmers, very expensive programmers, and it's just not available right now. And any enhancements that we do, we don't charge you for it. We don't say, hey, we added widget XYZ, we're going to charge you $1,000. We've made a lot of enhancements over the past few years, and we haven't charged a single red cent. Name is Silas Silver. Yeah, it works on any markets. We'll work on any markets. It doesn't matter, as long as the platform, one of the platforms that we've talked about, Thinkorswim, TradeStation, NinjaTrader 8, TradingView MT4 can plot that particular market or country's markets, it'll certainly work. It will work on tulips. If you were trading back in the tulip mania, you'll see 1, 2, 3s. Trader 68, we do have some automated strategies. It's a separate product. We just built out the 3S optimizer for Thinkorswim, TradeStation, NinjaTrader 8, and MT4. Actually, so let me correct that statement. There is no EA on Thinkorswim. The Thinkorswim does not have that capability, but we did build out an optimization and backtester component for all of these platforms. We're working on the EA for MT4, but we do have that capability for NT8 and TradeStation. And we'll make announcements on those later on. Let's see here. It's not a subscription model. This is a one-time fee. You own it for life. So to answer your second question, there's no auto renewal, no billing, nothing like that. Yeah, look at some charts here. Do I trade options? Yes, absolutely. I trade options. So it's not, I mean, you could, if you want to if you want to actually chart or plot an option, which I don't do, I'll just tell you up front, I don't plot an actual option. I look at the underlying, so I look at like an actual stock or actual futures or actual forex. But a 1, 2, 3 top or bottom pattern will work in any market. If you want to plot an option contract, you certainly can do that, and you can go back test or see, but it works on anything that you can plot. Yeah, it absolutely works on Heikin-Ashi and Rinko. Again, any market that displays price action. So let's look at the S&P 5-minute today. So here are the last two S&P. Here are the last two S&P trades. We had a short trade here, textbook short right here below the 200-day, closed below, got a couple retests. Beautiful, lovely move from 28.60 down to 23.20. And then we flipped around to the long side, closed above the number 2, came up. I told our students that, hey, be aware and cognizant of the 200-day. Look, if you want to trade totally naked, leave the moving averages off. You can do that. I like to plot the 200-day for reference points because I know that the 200-day can act as resistance or support. I mean, that's technical analysis 101. And we're trading technically below, against the trend. So even though I like this setup, still a lot of meat on this bone from 2,700, well, not 27, 2635-ish, all the way up to 2950. But what I said is be aware of the 200-day. It could act as resistance because look, this is TP1. And we had resistance, 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 little indecisive action, finally came up, broke through, and got that continuation to hit TP1. So I mean those are huge moves. Those are thousands dollar, 4-figure plus moves right there. Looking at the 5-minute today. All right, here's a 5-minute chart of today's price action. So what are these other moving averages? These short-term moving averages are the 5 and 21. So again, it's not a requirement, by any means, but it's an extra tool that I like to put in place for confirmation. So here we are, price action above the 5 and 21. We had a move from 31.45 up to 31.52, so 7 points. No trade here because we had no cross of the 5 and 20 per my rules. Here we had a close here, 31.66 down to the, look at that, 200 days right at TP1, acting like a magnet as usual. Moved from 66 down to 59. Another 7-point winner there, $350 a contract. And then we got this little guy setting up here in the Asian session, 31.39 long. You've been as high as 41.5. Don't get greedy in the aftermarket. Let's see, CL, another market I like to trade here. All right, so a few setups on crude oil today. Long from 40. So we'll call it 40.20. I like to trade crude on nickels and dimes. So we have a 40.20 up to a 40.40. It's 20 cents, $200 a contract. Here's another short, and then another short. I like to see the crosses, so I didn't take this one because of there's a wide spread there between the 5 and 21. But those that took the initial one moved from 70 down to 50, another 20 points. And then this one here from 80 down to, looks like 67, we'll call it 70, so another 10 ticks there. I've got a couple students trading off the 233 tick chart. in my opinion, on crude, it just works like gangbusters, and we're actually trying to build an EA, a robot, to trade the 233 tick with some rules. You can see these setups. I mean, I'm not making this up. You can see them coming down, hitting just TP1 almost to the tick. And this happens every day on every instrument. So we have a 1, 2, 3 bottom on that 233 tick forming at this very moment. All right, let me look at some of your other symbols. You're welcome, Trader68. No, it's Silas, S-I-L-A-S. I don't get my feelings hurt if you butcher my name. It's been happening all my life. So not Cyrus the virus, but Silas. Okay, let me see here. Let me look at some stuff for you guys. Shopify. So we don't have anything. Well, I mean, we do have. We have a 1, 2, 3 top forming right now, but it's a 1, 2. So nothing. Nothing cooking right now. CSX. All right. Yeah, I mean, so what you see is what you get. You know, I'm not manipulating anything. There's no repainting. There's no like tomfoolery going on here. Whenever you download this, you know, out of the box, what you see is what I see. What I see is what you see. Now, what I did tell you is for those probably you engineer types, if you want to go in here and tinker around with your settings, you know, here's where you can change all of your settings, you know, your colors, the plot visuals, things like that. My settings are bare bone, out of the box, black and white. Why? Because I know after trading this pattern close to 15 years, how profitable and reliable the 1, 2, 3 pattern is. Look, I have strayed off the reservation multiple times, bought indicators, bought other courses, chasing shiny objects, and I was all over the place. And what I did is I said, I went back to what's working. I was chasing the Holy Grail, like probably a lot of you guys. There's nothing wrong with that. I think it's part of the learning process. But, and I still like to learn new strategies. I mean, learning is a good thing. But what I did is eliminate a lot of the noise. And I said, how much easier or more simple can a 1, 2, 3 pattern get? I like simple. I like mechanical, removes a lot of the emotion. And I've applied a couple of other things throughout the journey. And I share that with you in the Discord channel on certain 1, 2, 3s that I look at. I don't take them all. I don't take all longs and all shorts. One, it's not a prudent thing to do, regardless of what system or methodology you're taking. And two, there's too many trade setups. Think about it. Are you trading a tick chart, a minute chart, a 5-minute chart, a 10-minute, 5-minute, 15, 30, hourly, 4-hour, daily, weekly? There's thousands of markets, a dozen plus different time frames, dozens of different time frames. You get into 233 tick and 533 tick, so on and so forth. Can't track them all, can't trade them all. Now we did build a back tester and optimizer for those of you that do want to know that kind of info. But I leave it out of the box, black and white, at the bare minimum settings, because I want to be alerted to every setup. That doesn't mean that I will take them, but I do want to be alerted to them, if that makes sense. I want to be alerted to them, and then I'll do my analysis. Hey, do I like this trade? Or I've got 5 trade setups. Which one do I like best? Where do I want to apply my capital to? Let's see, BA. Get back here. All right, so BA is in the middle of you see, I've currently analyzed this guy right here. And this is, you know, I'll tell you, this is a longer 1, 2, 3. I didn't take this one. We did take a short on BA, I think back in, we took this one, I think, back in March of 19. That was an awesome trade. Now, there was some unfortunate news revolving around that one. But you see how many bars this takes? Doesn't mean that it's bad, but you know, we finally get that close here at 185. We trade all the way up to 230. I mean, hell, who wouldn't take $40, $50 of any stock? I mean, that's a large chunk of change, and it's come back now, and you're basically around that break-even level. But you see how many bars this took? I'm usually kind of crossing this one off my radar. I like to see a more traditional 1, 2, 3, and then pop up above, you know, within, you know, X number of bars. This is like 2 or 3 months of bars. This now moves into another almost trading pattern, a narrow sideways channel. So what I like about this though, and one of the things I like to look at on an intraday chart as well as a daily chart, is this divergence. Remember, I was talking about that earlier. So we had these new lows. This is the lowest low of this little move here. But notice that this low in this RSI is higher. This right here is higher than that. So that's that divergence that we're talking about. Let's see, Euro pound. Oops, I think I left the P off. All right, so here is Scott, the turquoise lines are just price levels that I've gone out on lower time frames, so you can disregard those. All right, so the Euro pound, again, you know, I like the 200-day. Doesn't mean you have to like it or use it either, but you can see why I have it here. Look on this long over here. It served as a pausing point, and it certainly causes a pausing point here. Now, a lot of times you're going to see this. The 1, 2, 3 will go 50% of its profit objective. We'll call this 50%, and we'll call this 50%. That's when I say a little bit of common sense. Don't sit back and just keep your stop way up here, keep your stop way down here. Market has moved 50% in your favor. Take some profits, move your stops to break even, or move them to some area of price structure that makes sense. Maybe you're trailing it with a moving average or PARSAR. I don't know, but that's what I would advise if you want to ask me. TradeStation and Ninja does not charge a fee. No, you just load. They don't view this as some type of premium fee or widget add-on. All the instructions and tutorials are in the members area, and if you're able to turn on a computer, you should have no problem loading it. Take you maybe 5 minutes to install. And we do have a support guy that can actually log into your computer and do a remote session, and he can help you get up and running. He's a really super guy. He will get you set up, log into your computer, and you just sit back with your cocktail and let him do the work. That's right, silver. Yep, like Paul and Silas in the Bible. There's your Euro pound. It all depends on how much time trading during the day. Depends on if I'm traveling or if I'm handling kids' activities. I've got a certain time period, you know, like to get up around 6 or start looking at the charts around 6 a.m. Central, sometimes a little earlier, sometimes a little later. It all depends on what's going on. looking at 5 and 10 minute charts, hourly, 4 hour, and then of course daily for swing. I don't have a statement for the EA. Let me see if I can pull that up for you. I don't have the EA running right now for that particular instrument or any instrument. I just don't have the EA running right now. Let's see if I can find some of those back test results for you. Goo. Eric, you should get it immediately, and I appreciate that. Appreciate you first and foremost. Should take you just a couple of seconds. I mean, not a couple seconds, maybe a minute or two. Possibly check your spam folder, but it'd be highly unlikely that it goes into spam. If you're having any problems or questions, you can email us at support@Seasonal Swing Trader. We don't throw you out to the wolves. We don't leave you hanging. I would love, we'll help get up and running. So what do you expect? You just get a welcome email. It's gonna have your login information and take you right to the members area. So here's some backtest results. You see we've done a handful of markets here. I think this is the S&P on a 1 hour. You can see the results based on these particular settings. Let's see, here's a 5-minute crude. Here's a 4-hour chart of the euro currency. Here's a 1-hour chart of gold. Here's the 5-minute chart of the 30-year bond. So you can see why we're very excited. I mean, look, I've been trading this strategy for 15 years. I didn't need any back testing proof, but after a while, I've kept getting questions about, win-loss ratios and how does it work and this and that. Well, nobody can answer that because it all depends on the individual. How you trade this particular setup all depends on you, me, and everybody else watching right now. How many contracts you're trading, what's your account size? Are you taking profits here? Did you move your stop down to here? Did you wait for a second test up here? Did you stop yourself out? Some people may still be in and then end up profiting down here. I mean, you know that. I mean, you know that. If you've been trading any length of time, there's no right or wrong answer. It all depends on the individual. Psychology, trade management, trade size, emotions. Does it give you a probability for each setup or risk to trade? Doesn't take earnings or anything like that into play. I personally don't trade in front of earnings, so I just, I'll just wait for the next setup. As far as like news events go and things like that, if I'm looking at futures or commodities or Forex, and I know there's a pending news announcement, instead of getting into maybe a longer term trade, like based off a 4-hour or daily, I'll drill down into a lower time frame and try to trade in and out of that before the news hits. So here's some very, I mean, these are trades that we just got out of. Here are trades that we just got out of. This is WB. Actually, we're still in WB, but we got long, and that's a trade we took on WB. Here is a trade we got out on Stamp. This was a trade that you can see we actually got in early we got in short around 194. And it went as low as 167 and some change. We are actually in wheat right now. we're in September wheat, even though we're based hasn't quite met my criteria here on getting the close above and the number 2, but we've taken recent trades in swings as well as corn, and you can a lot of these you can trade ETFs alongside too. So there was a last swing set up there in corn. Don't trade OTCs. Nope. Yeah, Eric, if you're having any issues, let us know. You're welcome, Silver. It is Chris. Yeah. Yeah, the private Discord channel right here. Let me minimize this. You get access, and let me show you what that looks like. Show you what exactly that looks like here. All right, so here's what it looks like. You see, we're posting charts here and commentary on the what's and whys of each. I've got a student of mine doing some heavy back testing there at MT4. He's actually funding one of the prop firms. Can't remember what it's called, but he's going for one of the prop challenges, trading FX. But you see we've got, swing, stocks, futures, Forex, all that good stuff. Yep, no problem. All right, gang. Well, I think I answered all of your questions. If I haven't, if there's anything else that I left on the table, didn't mean to. There's just so many questions. I try to scroll up and see everything, but please reach out anytime. My email is support@seasonalswingtrader.com. I'll answer you personally, and I want to thank everybody that has joined, all the new students, clients. Look forward to working with you now and well into the future. No, the support does not end after a week or a month or a year. The support is good for life as long as I'm around, and can't promise I'll be around forever, but the support is around as long as I'm around, and you'll have access to this. You can download it, use it. NT, yes, you can use it on multiple computers. All right, gang. Well, it's been a pleasure. I truly enjoy this stuff. There's the offer link, seasonalswingtrader.com/code. Look forward for us all collectively to work together, find setups, trade together, the more good things to happen and occur. I can assure you that we're constantly adding new things to help you, benefit you. So look forward to having you as part of the program and the community. So everybody take care. Have a great day, great morning, afternoon, evening, wherever you are in the world. Good luck, good trading, and I hope to see you on the inside. Take care.